Hey everyone, welcome to another episode of Rightcurve on the Midcurve podcast by Jito. So I'm Brian Smith. I lead the Jito Foundation and two special and very topical guests today from VanEck. So we have Laura and Kyle. Do you guys want to introduce yourself? Maybe start with Kyle.
Sure. Great to be here, Brian. Thanks for having us. Kyle DaCruz, Director of Digital Assets Product at VanEck. I've been at VanEck since 2017, so sort of for us, the early days of when we really started exploring being in crypto. So a lot of the exciting things all the way to now. The one highlight that I would make is I never did I think in a million years when we first filed as the first asset manager for Bitcoin linked ETF back in 2017 that would still be the main point of topic in the audience today with so much innovation, a lot of stuff you guys are working on. Bitcoin ETFs are still the sort of the most requested topic for us. So it's interesting.
Laura Vidiella here, Head of Investor Relations for Digital Assets, and haven't been at the firm since 2017, but actually just last 8 months. And I'll say that it's incredible also all the different products that we've pushed in the past 8 months. So definitely very active on the digital asset side, and it's super exciting what we're doing with you guys and what's coming up next as well.
Yeah, and I mean, Kyle, you mentioned like being involved since 2017 at VanEck, and I mean, I think a lot of people probably don't have the history of like what VanEck is. Like everyone's like, you guys seem like a very crypto native firm, like VanEck intern on Twitter, and like all that stuff is like
Yeah.
all in on crypto, but like that's actually not your heritage at all. So, I mean, do you want to talk about like what VanEck is, and then why it had so much conviction at such an early time on crypto products?
Yeah, I think, and particularly back in those early days for asset managers in 2017, that was always the first question the TradFi audience would ask us is why are you guys even in this space? Because historically we've been known a traditional financial shop founded in 1955, very closely tied to gold and commodity markets. And I think if you look at how VanEck started, it would make complete sense to most folks of why we're looking at crypto or why we love the space. Back during our founding, really we were known as the first really gold equities fund back in 1968, which was pretty novel at the time, getting ahead of certain market conditions and really being ahead of those insights. Our motto is sort of forward looking intelligently designed products, and so that's been our ethos. So we did that 1968. We were very early in emerging markets and access to those markets in China. And then additionally, the ETFs. We were one of the first firms in the ETF space. So I think when you look at our history, it makes total sense that we're looking ahead to what are the next markets that are going to be really exciting to operate in. And I think for us, 2015, 2016, and then definitely in 2017, we identified first Bitcoin. And really, the thought was back then is if we are a gold shop, as we were known for quite a while, and we have exposure to this space, we should at least kick the tires and really understand if Bitcoin is an alternative or complement to gold. Very quickly, as we got down the rabbit hole, we said, wow, there's really something here. And with most folks' crypto journeys, it starts with Bitcoin and then said, wow, there's so much more here if you peel back the layers of the onion. There's so much efficiencies to the financial markets, frankly. So immediately fell in love with the space. We're the first asset manager to file for a Bitcoin ETF. And from there, we were the first for several others, such as the Solana ETF as well. So definitely excited for the future of this.
Yeah, and I want to get into ETFs in a second, but I mean, Laura, you've actually been around crypto for a very long time. I mean, what briefly kind of like, what were you doing, and then why did you decide to kind of join a firm like VanEck recently to, get very involved in the traditional finance side of it at
Mhm.
VanEck?
I started on the institutional side with LedgerX back in 2020. It was the first CFTC regulated exchange in the US for Bitcoin options, actually. And I really liked the idea of just bringing also the option contracts down to like 100 only, as opposed to having to get the 100 multiplier in equities and trying to get to know a bit more in the institutional space on that side. And then through the years, always followed VanEck on the side. But I guess personally, I felt a bit more like crypto native, right? And I didn't really think about moving away from the from the crypto native hedge fund side of the business after Ledger actually joined a hedge fund. And but then over the last year before I joined VanEck, I met a lot of the digital assets team, and then well, two things. One, they're all really fantastic, super smart people that it's just a joy to work with them every day. Then the second thing is that you start realizing that even though it's a large traditional asset manager, at core is very startup-y, very innovative, and very crypto native, even like more crypto native than a lot of the actual crypto native firms out there, right? So that's one of the things that made me want to switch jobs, join VanEck, and then also just help push more the narrative through things that we can build, right? And maybe sometimes it feels like we're too early or not, or anything you say, but it's nice to just be able to experience the whole process, get to know it, what's missing, what's not missing, who are the main partners, and then just try to push this industry all together, right? So yeah.
Yeah, no, I mean, can think you're too early in doing a lot of stuff that may not see any action for a while, and then, as we've seen in the last 6 months, things can move very, very fast all of a sudden. So if you didn't have that groundwork, then you'd be in a very different
Correct.
place.
And someone's got to start it, right?
Yeah, for sure. So you guys
Yeah,
have been
and
doing great
Brian, I
work.
also think there's merit to being early, not just to pat ourselves on the back and say, "Wow, we were first, we're early." It's not just that. It's actually understanding that when you work in a traditional financial firm, certainly we have the crypto team who are very crypto native, who understand the space, but it's getting the hundreds of employees who are not necessarily crypto native to understand how this space operates, right? So when you're thinking of operational teams, compliance teams, legal teams, so that when you are ready to move quickly and something changes, these teams are all up to speed. They know how to work operationally, how transfers work, how whitelisted wallets work. To understand those complexities is really important to be ready for that
Mhm.
day.
Yeah,
And
I
also,
mean,
I'll say communicate these complexities to some of our partners that we work with, right? To then just part of this like acceleration and adoption, things that we want to see built or not built yet is speaking with our partners of like, okay, who's thinking about this? How are you thinking about it? What do you need? How can we support you?
yeah, I think people just like generally underestimate how much effort there is in working in a traditional finance context versus like, all of us are crypto native. Like for ourselves, we just spin up a wallet on a new chain and do whatever we
Right.
want. It's like that is the opposite of
Yeah.
how it works. Like operationally, even like Salesforce, right? You guys have hundreds, thousands of people out here talking to clients every day about it, and they are not like in the trenches in crypto. And so like how do you
Mhm.
communicate these things to the community? And so it is a very long process, but it's pretty valuable. I mean, just to level set, what are like the main crypto products from VanEck as you guys think about it today?
Yeah, we have products. They're distributed regionally across the globe. So we're a global financial firm with offices around the world, Europe, Australia, et cetera. But I would say in the U.S., we have a few. We have the ETFs, the Bitcoin ETF, Ethereum ETF. We have some equities-based ETFs that invest in the crypto ecosystem. We certainly have some liquid token private funds as well as a VC fund. And then additionally, we've also moved into the tokenized space with VBILL, which is our tokenized money market fund. Outside of the US, we have a lot of retail facing products in Europe that we've had for years, frankly, just because by merit of the European environment being more open, regulatory environment being more open to tokens. So you could launch retail products there for years. So we have about 13 digital asset ETNs, both single token and basket. But certainly excited for the US and sort of this regime being more open to having conversations about crypto, and you can already start seeing some of the communications of where we could be going next with new products.
Yeah, and I mean, I think that's, obviously topical today. And I think what everyone, at least in the Solana community, is excited about. But like highest level, why do you think ETFs matter? Like, why is it a good product? And why do you see customers holding something in an ETF wrapper as opposed to the native asset?
Yeah, we have this conversation a lot, and I think going back years of when we started talking about a crypto ETF. At that point, it was just the Bitcoin ETF. The first question was why, and even for advisors, that first question is why in the U.S., right? Because if their clients can already access these tokens, whether on DeFi or through a CeFi exchange, why do they even need the ETF? I think there's a lot of reasons why, but I think it's one, it's access to a different market. So, we love the support of the crypto community in these ETFs, and we've gotten that. But I think that's not the primary market for these ETFs, right? The point of the ETFs is one, to put the investor protections of the ETFs around these products, and also offer it to folks that maybe really haven't gotten into this space yet. So I'm sure we all anecdotally have stories of our parents and loved ones and family members and trying to get them to buy crypto tokens and self custody them. I've certainly tried. Some of those had, and it's great success, and some of those just they never were going to do that, right? It's just not possible. They're not interested. So the ETF is a great option for them to still get exposure to really these great economies that are being built, but in that wrapper that they're used to and a little more
Mm,
easier for them.
okay. Yeah. No, it makes perfect sense. I don't know if Laura, you had anything else there?
Just a quick addition. One of the things as well, not only for the ETFs, but also like other wrappers like the public treasuries, whether we're seeing now, those also offer some institutions access to crypto that they wouldn't have otherwise, right? Because they have a mandate to not touch directly the token or have to custody or anything like that, even though they can do it through maybe, OTC provider or other asset managers. But this way they can get access to this product without having to touch directly, like quote unquote crypto, right? And it offers this like easier wrapper for them for audits as well and anything related more on the traditional side.
Yeah, I mean, it's very interesting when you talk to large financial institutions that they are not allowed to touch spot crypto, but anything in an equity wrapper they can touch. And they can even
Exactly.
like over the counter bilateral derivatives on crazy crypto things, but like owning Bitcoin directly is not possible. And it just,
That's right.
it's what the system is. And it takes time to change it. But you
Yeah, I'll
mentioned,
say like we've gone a long way for sure, but I've still even had a couple conversations with some advisors that they are still a bit concerned sometimes of suggesting or like offering the Bitcoin ETF, right? And that's like one that is really, really adopted now. So we're still like, doing step by step, doing with things that feel already super adopted, but it makes it easier.
Yeah. Yeah, I would say I think a lot of folks, you see the headlines for years. You've been seeing the headlines. The institutions are here, right? There were articles in 2017 that said that. There's still articles today, and I think there's a big asterisk there. Is like, what does that mean, right? Certainly, institutions a lot more today are working in crypto or doing things behind the scenes. But if you think of crypto offerings to retail products from those institutions, it's pretty minimal today. I think we're still scratching the surface of broad adoption in the U.S. And I think the ETFs can be a good way to accelerate that adoption for those folks that maybe haven't had exposure to crypto projects in the past.
Yeah, 100%. And Laura, you mentioned treasury vehicles, and I think that's captured a lot of attention as right. MicroStrategy has been around forever, but now we see all sorts of interesting and somewhat exotic vehicles on like altcoins and way down the list. I mean, from talking to clients, how do people perceive the benefits of holding a treasury vehicle versus spot exposure via an ETF?
It's a leverage bet uh, for them, and that's a good question. Yeah, it's a leverage bet. The new ones, it feels like from a psychological point of view, as though they're still like small enough that maybe that will grow faster in price, and they can take advantage to that exposure faster. And then I think also they see, especially after the Circle IPO, right? I think they see there's like this second wave of excitement, and they see all these other tokens as well, from Hype to, I mean, Solana has also a few of them, right? That are also thinking of this new structuring it out of the market. So they see it as an easier way for them to put it into their portfolio, right? And and a nice leverage bet that is supposed to be more liquid as well for them.
Yeah, I think also, this question comes up a lot. Are these treasury vehicles, are they competitors to sort of spot crypto ETPs? They can be to an extent, but I think they're more complementary, and I think it's a different audience. When you think of traders who constantly are watching the markets, understanding the volatility profile, that makes a lot of sense in these treasury structures. I think the crypto ETPs in the US that are just buy and hold essentially, and those are for folks that maybe over the long term want exposure. They see the long term scalability and sort of the excitement behind this asset class, and don't necessarily want to monitor minute by minute. They're not day traders. They're looking to get exposure and for the long haul.
Yeah, I mean, as just an example, I mean, I would consider myself crypto native, but like I own a good amount of Bitcoin ETFs just because like
Mhm.
the retirement benefits and like you can
That's right.
recreate that with like some weird retirement account for DeFi and all that stuff. But it's like I just don't want to fuck with that. Like I would rather just throw it in my brokerage account where I have this capital segregated anyways and like get Bitcoin, set it and forget it exposure and like not monitor the chart on some of the leverage and activity of a treasury vehicle. But like on ETFs specifically, what has changed in that landscape in the last 12 months? And like, why do we see it in the headlines pretty much every day now?
Yeah, I think it's a few things. I mean, the majority of that is driven by regulatory sort of narrative, right? And I think over the past 7 or 8 years since we filed for that first Bitcoin linked ETF, it was a headwind. And I would say the regulatory narrative has changed to become a tailwind. So I think that's why there's a lot of excitement as far as what ETFs are coming next. I don't think the regime change meant everything is approved day one, right? That's sort of a non-starter. But I think what it means is regulators are engaging much more. They're asking the right questions. They're pretty frankly more knowledgeable than a lot of folks think about the crypto ecosystem. So I think it's become a tailwind because they're trying to create the ability to invest in and get exposure to these assets in a safe and regulated way. Whereas I think over the past few years, it sort of felt like you were hitting a wall, and it was very restrictive, and the ability to offer these products wasn't really an option. And then the last thing I would say is, and sort of connected to the regulatory tailwind, is that sort of the US government and the US regulators saying it's okay to invest in this space, right? It's not just the Treasury talk, it's also the SEC putting out sort of letters and notices regarding staking and other things. It's sort of a stamp of approval for a lot of institutions in the US to say, oh, okay, now we can actually look at this space and there's some tailwind behind us. It feels like it's safe because US government and US regulators are saying this could be something, right? This is not, the stuff we do in the basement. This is really in the limelight, and institutions should have exposure to the space.
Yeah, no, I mean that credibility and just ability to touch it unwrap unlocks a huge client base. And I mean, I think what certainly I'm most excited about and is getting a lot of conversation is the Solana ETF. And maybe you guys can just summarize at the start of like what where that has been historically and kind of what is happening today with potential Solana ETFs.
Yeah, absolutely. I think, we can't talk too much about it because you do have an active filing with the SEC for a Solana ETF. We were the first asset manager to file for the Solana ETF. I think, VanEck's strategy is not quite to file for every crypto asset, but it's to file for assets we feel pretty strongly about that folks should have exposure to. Solana was one of those early projects that we pretty much had conviction from day one that investors should have the option to get exposure to this. So we did file that Solana ETF.
Okay. Um, and from a market standpoint and just like talking to clients, I think Bitcoin ETFs are obviously overwhelming. Ethereum ETFs, it's like ambiguous, I think hasn't been as successful as a lot of people hoped. And Solana, a lot of excitement, but who knows where it stands. I mean, is there anything you can say about what client sophistication of like the more traditional customer base, what they know about Solana and how that potential kind of interest compares to other smart contract networks like Ethereum or the other ones that are kind of in the queue to get an ETF listed?
Yeah. Yeah. I mean, I can say, from our experience, we have been educating US institutions in the advisor market on Bitcoin since really 2016, 2017. And so that's quite a long time of educating the market. And I think now you're starting to see the fruits of that. So I think it's one of those things where it took 7, 8 years for them to get on board with Bitcoin. I don't think it will take 7 or 8 years to get on board with these other assets like Solana. But it isn't sort of a day one. Everyone gets it. Everyone wants to buy it. I think it's still an educational, marketing and education game. And I think that one of the benefits of Solana is the Solana Ecosystem Foundation. I've done a great job of building this really fun ecosystem that's supportive. There's sort of a unified message of what it is, why it has value, why it matters. And I think that's really going to be instrumental for not just the ETF issuers, but really everyone in the US to really broaden that adoption. It's going to be months and months of folks like VanEck in conjunction with our partners in the Solana ecosystem of educating clients and continuing to get in front of them.
I'll definitely add here that having a strong community, it's one of the things that stands out the most from development side and also from all the different apps and products that are built on Solana. And for the ones that already hold Bitcoin and understand the value add of using decentralized systems, right? Just having a different kind of structure that is faster, that is very efficient, low in costs, and that's like things that they understand, like the difference also from like starting with Bitcoin, moving into smart contracts with Ethereum, and then how Solana, was like better or like fast, not maybe faster version of it, and they see this evolution, right? And those are things that matter to them.
Yeah, I think it's a wide spectrum, Brian. I think, when we speak to advisors, and say there's an audience of 50 advisors, maybe half the audience is really knowledgeable, understands the differences between Ethereum, Solana, and why one is more appropriate. And then the other half of the audience, they're asking why Solana is the next Bitcoin, right? And they're not even understanding proof of work and proof of history or proof of stake, et cetera. So I think it really is an educational game and making sure they understand why it exists, where it kind of fits in their client portfolios, if at all. And so I think that's going to take time. And I think, again, the benefit of the Solana ecosystem is this great community and narrative, unified narrative and messaging is going to help with that education.
Yeah, and I mean, you mentioned this earlier, but like Europe is much further ahead in terms of the diversity of assets that are in ETP products.
Mhm.
There's a lot, way beyond even Ethereum and Solana. I don't know how close you guys are to the Europe market, but are there any like observations you can share about what generally seems successful and ends up getting kind of traction amongst outside investors in that market versus what isn't successful, and like how different tokens should think about, will people outside of the crypto bubble actually care about this?
I think it's interesting. I see a bit of like audience differences, especially in what specific tokens they like to buy or not or get exposure to. I think some chains did a really good BD job in the previous cycles, and Europe is a little bit focused on more on those sometimes. But the one thing they'll say about Europe, at least speaking with like different platforms and other operators there, is that they really like to do something with their tokens, right? So they really like staking products. They really like to just not hold the asset, but be able to do more with it. And so hopefully this also comes on the other side of the Atlantic as well. But that's actually like great news for everyone, right?
Yeah. Okay. And I mean, talked a lot about ETFs, but the other end of the spectrum, I think of it as two ways. One is getting crypto native products into traditional finance rails, which is the ETF. The other side of it is getting, more traditional finance products onto crypto rails, which I would say is broadly under the RWA umbrella. You guys have been very active there, including the launch of your recent product VBILL. I mean, can you kind of talk about the general advantage of these type of RWA products and why you guys are spending so much effort getting that onto crypto networks like Solana?
Yeah, absolutely. Happy to, Brian. I think, it goes back to sort of being early in crypto has allowed us to really get a comprehensive view of the market, demand, where things are going. Frankly, a few years ago, we started looking at tokenizing assets and securities and sort of products like VBILL. We sort of got familiar with it, understanding the layout, and we decided not to at that time. I think now we're looking at the market and we're saying, certainly demand is growing in the RWA space. We're very excited about it, but we're looking to 5 years from now, 10 years from now. What is that market going to look like? And that's when it can get really exciting. To your point of sort of bridging traditional finance with crypto and Web3 natives, I think VanEck is set up in a pretty nice space where we are the traditional firm, but we have sort of been very involved in the crypto native scene for greater than 7, 8 years now. So I think we can go both ways. We don't want to just bring crypto to TradFi. We also want to bring TradFi to crypto in a way that makes sense. So really it's about understanding your audience. It's about not just launching a tokenized money market fund that crypto users can hold in their wallet, because that's not very exciting. It's building a product that moves and has the utility that they're used to, right? That you can do things with it. You can post as collateral in the venues you'd like to use it at. So really that was the impetus of launching this product and why we didn't do that product years ago. Um, to start, when we said, let's start with VBILL, a tokenized money market fund, the answer there was, well, how can we make it better than what's out there already? And really, when we looked at the scene, there was a lot of tokenizing securities. You hold it in your wallet, fantastic. But crypto users are saying, okay, well, what is the demand for that? 4 to 5%, great. But in DeFi, you can get double, triple, quadruple that. So why is that product necessary? It's, well, can you post it as collateral at some of the places we're using it? Can we make it more capital efficient? Instead of using stable coins as collateral, can use VBILL, get 4 to 5% on top of what you're already doing with that collateral. So that was really the impetus behind it. And as we move forward, it was, how do we make this more crypto native? Can we offer 24/7 liquidity, both on the ins and the outs? So one of the benefits of VBILL is this instant mint feature. where investors can come with USDC and then immediately get VBILL tokens atomically back instantly. So they immediately become shareholders of the fund. So the benefit of that obviously is on a weekend. If you put in a creation order, you don't have to wait until Monday to instantly start accruing interest. You can actually do that on a Saturday at any time of the day, as long as you're before the daily cutoffs, and you start accruing that interest, and you are a shareholder of that fund immediately. So pretty different than what had been out there prior to that. And then similarly, on the way out, through stablecoin partners like Agora Dollar, AUSD, you can actually have 24/7 liquidity. So if you wanted to get fiat, you could Monday through Friday, which is pretty standard in the traditional finance world. But if it were late night or Saturday afternoon, through our partner, you could actually swap immediately VBILL tokens into Agora Dollar AUSD and get that liquidity immediately.
Yeah, and I mean, the Jito Foundation was excited to get involved in VBILL. It has some fiat, and it wasn't earning sufficient interest, and also wanted to keep things on chain, and so is very excited to use that. I mean, today, as you mentioned, it is mostly kind of idle money market fund, but the ability to do more things with that capital is very exciting. How do you see kind of on-chain finance working for RWA products? Today, they have KYC processes, which makes sense given how the product is structured, but that makes generalized DeFi in the same way that we're used to hard. And so, how do you see the future of these type of assets on chain?
Yeah, I think there's a few things, and I know Laura has strong opinions in this space, but I think I would start with one, making this product more usable for the crypto community. And you kind of alluded to it, keeping things on chain. So there's a lot of tokenized products out there where you can fund in fiat and then you bring it back on chain. But there's a lot of, say, DAOs and other institutions that their assets need to remain on chain the entire time for their audit purposes, et cetera. So VBILL really was structured to benefit those holders. So again, if you needed to fund in USDC and that's never going into fiat or off chain, that's always atomically swapping into VBILL tokens, so that DAO or institution can have the USDC on chain, and then immediately they're getting VBILL also on chain. So really, there's no disruption in that sort of chain of custody, no pun intended.
Yeah, just alluding something that Kyle mentioned earlier. To me, at least the most important or exciting part is to make collateral more efficient, right? Being able to utilize also this yield, and when you have locked collateral, they're just like dollars sitting idle doing nothing, right? This way you can make it more efficient, and then being able to the other piece that will be important to figure out as well is its settlement across all these different units, right? So that everything is like well coordinated. And those are like, I think one of the interesting things of going through the process is just seeing all these little things that still have to be built, and also seeing how over the past few months, a lot of different partners have been really fast and quick at developing all these different small features. So hopefully with VBILL now, within the next like 2-3 months, we'll see a lot of new additional features that will make it a lot more exciting for investors to use and be able to hold in their custody.
Yeah, and I think, Brian, you alluded to sort of KYC, AML, and again, VBILL and sort of tokenized securities. At the end of the day, they're still securities, right? Regardless of the wrapper you put on them. But the idea is, how can we bring it as far to Web3 and crypto native and open sort of ecosystem as we can? And there are some ways we're working on that. You've seen Securitize has sort of created these S tokens, which are a way for some of these security tokens to be used in DeFi. I think you're going to see a lot of more movement in that space, partnering with certain DeFi protocols and pools, which will allow you to use this in their ecosystems. And now perhaps that looks a little different than what it is today. There again, VBILL is KYC to AML at the primary issuance level, and then it's really a whitelisted wallet sort of control, right? So anyone who's has a whitelisted wallet to buy or sell VBILL can interact with other users, and they can trade those peer to peer if they'd like, or directly sort of redeem and create through us.
Yeah, I mean, it's a trope in crypto of like we are early, but I think in the RWA space, it's definitely fair that we have some core assets now, and it's really how does the ecosystem evolve. And I mean, what's been pretty interesting and much faster than I expected was the on-chain equities that a few parties have announced recently, and similar structure. Obviously, it's security, and there's constraints around who can access that. But how do you guys think? Like, is that complementary to tokenized products like VBILL on chain, where all of a sudden you have like kind of a yield bearing cash account. You can trade into equities. You can lever it for on chain trading of equities. Like, how do you see this market evolving as it's not just kind of money markets on chain?
That's a great question. For the tokenized equities component, I always say, at least at like today's status of the market, it's more interesting to think about where, as opposed to like when, right? Like some of the emerging countries that don't have that facility, that access to American financial systems, now you can give them access to through tokenized equities, right? Um, I think more on the US side, there's like tokenizing equities is more to make the trading systems more seamless, faster, more efficient, and there's definitely a nice like win-win from being able to use this like maybe tokenized money market fund against all these tokenized equities, right? So in that front, yes, but it's like how do you define it across different geographies? Also, the other one that we've talked a couple of times is the KYC AML around all these different platforms, right? Does each individual have to KYC with all these different platforms, or is there going to be some sort of like centralized way to KYC so you don't have to like redo this process every single time you want to touch one of these products? So there's these two different avenues that I see. I'm sure Kyle has a few more to add.
No, I think that's right. I think you have to kind of break up the question into today and tomorrow, right? And where we're going. I think today it's, tokenized money markets have sort of been the low-hanging fruit of a use case for tokenized securities. But I think, tomorrow we're looking ahead to what's next. What are sort of more interesting strategies we can offer, whether that's equities or more fixed income type products. I think you see a lot of them tokenized money markets. You're seeing a lot of sort of private credit type strategies, and it makes a lot of sense why. But I think, one of my gripes with sort of panels and conferences about RWAs and tokenized securities is everybody sort of is regurgitating the same narrative, cheaper, faster, and that's great. It's true, but I think we have to be realistic about, it's not today. It's how do we actually build the use case so that we can get there to where this narrative is leading. If you look at today, the total addressable market for these products is it's great, but it's not where we need it to be to really build the ecosystem out. I think when you look at a future state where, particularly in the US, right, a lot of this is driven by what's allowed from a regulatory environment. If you think of the largest exchanges in the US or futures exchanges or derivative exchanges, when they start accepting tokenized securities as collateral, then really you're starting to open up the addressable market where it's not just the crypto native users. Now you can have traditional institutions say, okay, this makes sense for us to buy a tokenized version of this, because not only can we have 24/7 liquidity, now we can use it at the venues that matter to us. And really that's sort of how you get to mass global scale adoption in the future.
Yeah, and I mean, when you think of the future target audience, I think we all, like, based in the US, have access to good financial products. We all know that a lot of people around the world don't have that. Do you see this trickling into those populations that are underbanked, that don't have access? I mean, now have access to dollars only through stable coins, don't have access to any of the traditional security products that people in the US are accustomed to. And this would, be a potentially life-changing opportunity for them to have, wealth storage and accrual in, not their local currency that is continually being debased. So, but there's a lot of regulatory questions there that I have no idea. So, I mean, do you see that as an opportunity?
Yeah, absolutely. I think, what's great is, and you can sort of see it, whether it's the Genius Act bill that's being discussed right now, and some of the other various initiatives that the U.S. government's working on. It's become a tailwind, like I alluded to earlier, but it's going to take time. All of this is not going to change in one day, right? And I think everyone in the U.S. government is trying to intelligently think about this. Look, the way I look at regulation is it's never going to be perfect, but having some kind of guide rails or guardrails to say, okay, this is the way we have to go, it helps you build a business for the end users, right? Without some sort of gray area around it. I think to your point about emerging markets and sort of the unbanked, I think that's a great point. I think, frankly, when we've had discussions over the years about Bitcoin, even, right, going back to sort of the OG crypto, even that was hard to get that message across to institutions, advisors years ago. But I think when you go to emerging markets economies where they have hyperinflation and they really have a valuation issue around the currency, it's a much easier narrative or story to tell and to understand. And I think that's the case here. When I think of the U.S. markets using tokenized securities, I tend to think that the end user is probably not that excited about it right now. To your point, they've got access to 20 apps on their phone and all these bank accounts, and it's pretty easy for them. And they're not worried about the dollar hyperinflating, although I guess that changes depending on what we're doing in the U.S. Um, but I think if you go to the emerging markets economies, you're seeing stablecoin adoption massively increase, right? You think of the percent of total stablecoin use and how much of that is in these emerging markets economies. I think it makes a lot of sense to go to the end user with these types of products in those regions and jurisdictions.
Yeah, absolutely. I mean, supposed to be democratizing finance, and those are the people most in need of these type of products. My last question on kind of the RWA VBILL style product is, stablecoins are crushing it. Circle in the news, very, very successful IPO. How do you think about the trade-offs between products like VBILL versus vanilla non-yield bearing stablecoins? Are they complementary, or do you see them in a competitive environment where as access grows, we'll end up having most people migrate some of their on-chain assets into yield-bearing products like VBILL?
Sure. Yeah, I think today they're very complementary, and I think as where we are, VBILL is actually partnered with Agora, AUSD dollar, Agora dollar that I alluded to, and it's definitely a complementary relationship where folks can use VBILL, and really Agora can be sort of the payments infrastructure and provide liquidity for those holders of VBILL. Again, VBILL is a security. Tokenized securities are always going to have some issues with liquidity in the U.S. as far as time, and stablecoins can really provide an off ramp, on ramp for those holders of those assets. And I think if you look at what's in the Genius bill now, I think that's sort of the framework that's happening in the U.S. is that there's going to be a place for stablecoins, which can be sort of the payments rails, speed, access, and VBILL and tokens like VBILL can actually sort of be the more holding collateral use case.
They're definitely complementary, but they also serve different purposes, right? And I do ask myself often how stable coins versus tokenized money market funds will look like into the future. But I think to Kyle's point, one is going to be more forms of collateral, more like for financial products, structured products, and the other one is it's speed, it's payments, it's something that you can move around much faster than money market funds.
Yeah, absolutely. So I think we're almost up on time, but just wanted to finish with you guys, right? I mean, it's been a crazy kind of first half of the year on what's happening with crypto, particularly in the kind of traditional finance space. So curious what you guys are most excited for about potentially happening for the rest of 2025.
Yeah, I think, for us, I think it's a few things at VanEck. We're a little biased, but we really, in the US, it tends to be exposure. So how do we get more adoption and opportunities for exposure to crypto as a whole, right? And so that's regulated products being available, right? And so again, it's not selling to crypto users because you already have access and the ability to buy that, but it's really getting the message out to those that maybe have not had exposure prior. So new ETFs coming to market or being approved, certainly exciting. I think as far as the innovation side and expanding, I do think tokenization and the RWA space is really exciting as far as increasing the opportunity for those participants. It's only been 6 months or so since the U.S. institutions started really being open to playing in this space. And I think we're going to see over the next 12 to 18 months more start playing, not just in tokenized securities, but also into DeFi. And I think that's really exciting.
Mhm. Same. I'm excited about hopefully this like good regulation wave that's gonna come later this year. This is also attracting a lot of great founders to come into crypto and build, or also think about current founders or current CEOs of like established companies how to integrate stablecoins into their systems. And I think in the next like 6 months from today, like by Christmas this year, I guess, we'll look back at today and we'll see that crypto has done a completely 180 in just 6 months. And it's scary from one side, right? Because for like those of us that have been around for so long, I feel that in the past 3 to 4 months, so many things have happened that it almost feels like we're growing too fast, right? But I'm excited to see how that looks like in 6 months.
Yeah, and I think, not to keep hammering the same headline that everyone's sort of a narrative that everyone's discussing, but I do think the reason why the US regulatory environment is so important is because not that global financial markets are all about the US, but crypto and the thesis behind it is you're opening up uncontrolled markets. You're able to participate globally. And I think historically that has not been the case because of the regulatory regime in the US. And so I think as we kind of open up US capital markets to the rest of the world, can we get to a point where crypto actually maintains its original ethos of open capital markets?
Yeah, absolutely. Can't compromise kind of our original mission. Need to complement it, but not, pivot too hard. So really appreciate the time. Kyle or Laura, anywhere that you would recommend people, stay tuned to what VanEck or what you guys personally are up to?
Yeah,
Follow
absolutely.
our corporate Twitter account, VanEck
Yep.
underscore US, and that's the best way.
Yeah, no, it's a great account. So anyone that's not following it already, for sure, get on it. But anyways, yeah, really appreciate this. Been a busy summer for you guys. And so thank you for taking the time and we'll let you go.
Thanks, Brian.
Thank you.